Joining us is Adarsh Sinha. He's head of G10 Asia Pacific Foreign Exchange Strategy at Bank of America, Merrill. Adarsh, thanks very much indeed for coming in. Okay, well, it's all about the euro right now, and it's astonishing how we haven't seen a move down for the currency up till now.
Yeah, absolutely. I think investors in general are quite bearish on the euro, but no one really expected the move to happen this quickly. And I think after the EU summit, there was a lot of debate around whether it was a positive or negative for the currency.
They really couldn't make up their minds, could they? It was quite
something. I mean, our view certainly was it was negative, and the main question, I think, for investors is where's the money? And European leaders so far haven't really given any evidence that they have enough money to tackle this crisis. And I think that's why the euro is getting hit.
Particularly against the yen here. I mean, if we look at that move, it's actually masked, which makes the dollar move actually quite redundant.
Yeah, absolutely. I mean, euro-yen is close to the lows. Obviously, they're very important technical levels. If it breaks the lows, it's certainly likely that we'll go below 100. And that's certainly our view. We do expect euro-yen to fall during the course of 2011. And it's not so much because the yen is a good currency. It's basically the best of a bad lot.
Yeah, safe haven status, I guess that's what people call it. Let's just talk about where the euro, what your targets are. As you say, caught a lot of people on the hop, this move. So what are your targets when it comes to it against the dollar?
So for euro dollar, it's 125, which some people might argue is a conservative forecast, but certainly it's a forecast we've had for quite a while. We've been bearish in the euro. And as you said earlier, we do expect some sort of resolution during the course of 2012. But honestly, things have to get worse before they get better, because European politicians so far have given very little evidence that they're ahead of the curve in terms of tackling the crisis. So I think the first quarter is going to be a pretty difficult one for the euro.
Let's talk a little bit about where this all leaves sterling. Are people, foreign exchange traders at the moment, scratching their heads with this one because they can't decide whether it's on the outside or whether it gets a haven status as a result of being on the outside?
Yeah. I mean, my view certainly sterling is one of the better currencies. I think after the yen and the euro, it's one of our more bullish forecasts. So we do expect euro sterling to fall, for instance, and cable to be relatively stable around where it is right now. I think the UK is definitely benefiting right now from being outside the Eurozone and the flexibility that affords in terms of the currency, in terms of monetary policy and fiscal policy as well.
And maintaining their AAA rating as well, no doubt.
Absolutely. So I think sterling is one of the currencies, despite its exposure to the Eurozone, through its trade with the Eurozone, is one of the currencies that'll perform relatively okay. Let's
look at some of your trading ideas for 2012 here as well, some of those which would benefit from this negative environment, the picture and the portrait that you are actually at the moment painting.
Yeah, absolutely. I mean, the general theme of our trade ideas for 2012 is to be negative on European assets and the currency, and to be positive on the US dollar, for many reasons, but basically a sort of safe haven flow. And also I think you'll see some degree of fiscal tightening in the US, which is very much in contrast to other countries. Apart from that, I think one of the currencies that definitely has to play catch-up during 2012 is the Australian dollar. It's still at parity, very close to parity.
Which is remarkable. I mean, it's shown amazing resilience.
Absolutely, and if you think about it, I mean, Chinese equities have been underperforming over the past few days. People are worried about global growth, and yet the Aussie has held up very well. Now, there might be many flow-related reasons for that, or it might just be investors looking for an alternative currency.
Well, it is the yield play here as well, isn't it?
Absolutely, but if you think about it, I mean, if you look at what's priced in terms of interest rate cuts, if you look at what's going to happen to Chinese growth during the course of 2012, we don't expect a hard landing, but nonetheless growth is going to slow quite significantly. I do think the Australian dollar will decline towards the low 90s. So it's not a big move. It's still very strong by historical standards, but definitely lower than where we are right now.
Right. What else? What are you looking at? What do you like?
Well, we've recommended selling euro-yen. That's our other trade idea. We're relatively bearish on the Canadian dollar as well.
But you are cautioning on a possible housing market correction there.
Yeah, absolutely. I mean, we do expect the Bank of Canada to cut interest rates. They have interest rates well above zero. And if the US economy does slow next year, which is something we do expect growth to be sub 2% next year, Canada will be exposed to that. So, and the market isn't really pricing that in if you look at what's priced in terms of interest rate expectations and also the level of the Canadian dollar. So we do expect it to underperform.
Adarsh, thanks very much indeed for that. Adarsh